The market had a bad week, and so did the portfolio. Stay tuned, and I'll update you on the dividends I received this week, as well as my margin status, and we'll take a peek at how MSTY did compared to HOOW since I swapped them out last week. I'm on the hunt for an infinite stream of dividend income. It begins with my plan to turn $1,000 of Robinhood's money into $1,000 of my money. Remember that you need to do your own research for your investments. This is not financial, legal, or tax advice. Here's a quick look at the basics of my strategy. I'm avoiding market timing, options, and future strategies, and I am using margin. As a member of Robinhood Gold, I get access to $1,000 of interest-free margin. With that loan, I purchased 4 high-yield ETFs. I'm reinvesting half of the dividends back into the fund that generated it, and with the other half, I'm purchasing a NAV stable ETF that I can keep forever. And I chose the ETF SPY for that purpose. And very importantly, I had to purchase a strong foundation ETF that I chose as PAAA. It doesn't have wild price swings, and that's important because Robinhood requires that I have at least $2,000 of equity in my margin portfolio. Otherwise, I'd be subject to a margin call. So let's take a look at the dividends I received this week. NAV paid me 43.5 cents per share, and that tracks closely with the dividends it's paid out over the last month. Koi's dividend dropped to 49 cents per share, which is on the lower side. I received my first HOOW dividend this week at $1.37. That represents about 110% annualized yield for the day it was paid, which is great. Unfortunately, because the balance is so low, it totaled only $2.83 in dividends. And Friday night, SNOY paid me 15 cents per share as we start to get a better picture of what the weekly dividend payout may look like. I've already entered market orders to purchase SPY and to reinvest those dividends. Going back to my original purchases this summer, let's take a look at how much I've received in dividends from each of my ETF buckets. SNOY has paid $51.71. The combination of MSTY and HOOW has paid me $56.19. Of course, most of that has been MSTY. Koi has paid me out $51.83, and NAV leads the way, paying me $74.52. So if we total that up and exclude PAAA, I've received $235.91 in dividends so far during this experiment, and I've invested $118.79 of that into SPY. So primarily MSTY and a little bit of HOOW paid out the second most at $56, which is great, except for the NAV erosion. The $56 in dividends was more than canceled out by the lost share value. If we take a look at total returns, you can see that the HOOW MSTY position is down over 51%. Of course, this was a bad week for tech, and HOOW suffered, but most of that is due to MSTY. Even SNOY dipped down into the negative this week. My portfolio's equity dropped to $2,073, down about 1.5% on the week, which wasn't great for my margin balance. I've dropped down to only 3.5% above my maintenance threshold, putting me solidly in the high-risk margin status. If we take a look at the individual holdings, you can see the column for margin maintenance, as well as the maintenance ratios. HOOW is only 30%, and NAV is my highest maintenance ratio at 50%. The actual dollar amounts are not important in this portfolio because the maintenance requirements are less than $2,000, and $2,000 is the minimum required by Robinhood to have a margin loan. So one thing that's really helped me with this portfolio, and especially in weeks like this, is PAAA. Despite the tech sell-off and stocks being really up and down this week, PAAA actually gained a tiny percentage. So it's doing a great job as being the solid rock foundation of my portfolio. Here's a look at how my 4 high-yield ETFs did for the week. It was not pretty. Koi and HOOW were both down over 12%, and that's primarily because the underlyings did poorly. And remember, these round-hill funds are 1.2x leveraged, so they're going to go down harder and rise faster than the underlying. So of course, I'm not happy that my new fund HOOW went down 12%. However, I do feel confident that it can recover, and that's part of the reason why I got out of MSTY. HOOW has uncapped upside, so if Robinhood rallies, I would expect HOOW to rally with it and hopefully make up these losses. Here I've updated the chart to include MSTY, and you can see it fell over 16.5% this week. So even though HOOW did poorly, MSTY did worse. And a lot of that is because Bitcoin has fallen dramatically in price, and therefore MSTR has. But like I said in my video last week, I don't really have any confidence that MSTY would be able to regain this NAV. At the time I recorded this video, MSTY was trading at $8 per share and had recently been under $8. I'm glad I sold at over $10, which was still a huge loss, but I think that $10 per share threshold is sort of an important one psychologically speaking. And I hope that if Bitcoin rallies and MSTR rallies, that maybe MSTY would be able to get above $10 per share again, but I wasn't willing to bet on that. So next week I'll get 4 more dividends from all 4 of my high yield ETFs, and maybe we'll get some price appreciation good news. Let me know in the comments, do you think MSTY will ever see $10 per share again? And if you found this video helpful or entertaining, please hit the like button and subscribe for future updates. And remember, none of this is financial, legal, or tax advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.